Talk is a First Canadian presentation designed to be able to help you, the finance manager, overcome objections, close sales faster, ways to be able to work with your sales team, your other departments, and be able to take advantage of all the opportunities that are available. By the way, the most important opportunity, of course, is to look after our customers to make sure that they have the best of the best buyer's experience for years to come, and to overcome their challenges that may not be around now, but could be around later. If you have any questions or comments, we invite you to get in touch with me at First Canadian, Harvey H. Cohen, rather, at firstcanadian.ca. That's H. Cohen at firstcanadian.ca. And one more reminder, one of your amazing account managers can always be there to assist you as well. So with that in mind, today's topic is an important one as we enter into some difficult times in regards to money. Now, what's really interesting, again, is that we've just come through, although it's not really over, but we've really come through a pandemic that when we first heard of this pandemic back in March of 2020, you'll all remember that, 1 week to flatten the curve, you remember that one. So 2020, that was a time when we had some unbelievable feelings. We didn't know what the future was going to hold. And it all sounded pretty doom and gloom. And it was for many people. A lot of businesses did happen to close up, mostly in the hospitality industry. But what didn't get affected to any great degree was the automotive industry, the vehicle industry. And that was probably done because of great ingenuity and survival on behalf of those who were in that industry. But more importantly, the consumers' demand to want to make sure that they had things to keep them happy. And some of those things, of course, were vehicles. So with that in mind, we did well. But now something else is going on, a different pandemic, and this is a financial pandemic. And this is one where money is sick. And as a result of that, it's affecting the economy in a number of different ways. So one of those ways, obviously, is high interest rates, higher costs, and now, of course, the inability for some folks to buy. But the circle of opportunity is still there, and as a result of it still being there, we in the world of our financing should be able to take advantage of every opportunity that's there, not allow things to fall through the cracks, because in some cases they did when times are good, and more importantly, protect customers from the unknown. So with that in mind, we have a number of guests with us today, and I'm just going to call on somebody who's been around in the business for quite a while. Darrell Boughton, you, of course, are with us, are one of our team members with First Canadian in Central Canada. Darrell, is this the first time you've seen interest rates higher than 0%, so to speak?
It is not. No, I've seen them much, much higher.
What's
As a matter of fact, I was just having a conversation with someone the other day, and I said, historically, these are probably some of the lowest rates we've ever seen.
Absolutely. What's the highest you recall writing deals at? Do you recall?
22%.
22%. And this, of course, was not non-prime. This was a regular prime deal. Of course, non-prime didn't exist back then.
Yeah, well, I had a 19% mortgage at that time.
19% mortgage. That is what it is for sure. Dawn, how about yourself, sir? Have you seen interest rates higher than what we're looking at right now? And you were in the business of working as a lender at one point, weren't you?
I was a lender and a repossessor.
Is my name familiar? That's all I want to know.
Yeah, no, you know what? My mortgage wasn't quite as high as Darrell's was, but it was definitely in the double digits for sure. And it's a cycle we're going through. And to echo Darrell's point, yeah, these aren't bad relatively to what it's been in the past.
Also with us today, thanks, Dawn, is a gentleman by the name of Chris Collins. Chris, you've been so active in the world of finance. You were also in the mortgage lending business for a while. Chris, you've seen, you were able, by the way, to take the group you were with up quite a bit in the world of selling and dollars per vehicle. But in your point of view, one of the products we like to talk about is credit insurance. In your skills and talents, because you can sell all of the products with ease. I have to say, with hats off to you if I wore a hat. But in actual fact, the credit insurance portion, especially today in your group and what you're involved with, how important is that particular product today? And is it more important today, perhaps, than before?
Well, I write notes, Harvey, although we don't need to write notes, or maybe we do. Maybe we need to get out of our own way. Peace of mind is something that comes to mind. And I wrote down selling the urgency of credit security. Are we calling it insurance or are we calling it security? I mean, what really is it? And I always challenge back, are we the only people in the room that's nervous to talk about creditor insurance or credit security or insurance? As soon as we say my feeling, as soon as we say the word insurance, that's when people can tighten up a little bit. It's just the way it is, that Mother Nature invented it, the kind of the way that people feel about it. And then we can offset that. If we know what that objection is going to be, Harvey, we can get ahead of that. So I think it really boils down to, what do our customers know? It's exactly what we tell them. And we have to put some urgency into it. And we have to, we got to watch what the customer feels. They feel what we feel. If we're nervous, they will be nervous. We have to really settle that a little bit.
Well, that's a great comment. And in actual fact, some people might be nervous now in the financial world, but they don't know why. Maybe, at the beginning of all of this, and Don, when COVID first hit, people had no idea what was going on. Now, in the world of the financial issues that could be out there, are you seeing that some of the dealers are saying things such as, customers are a little more cautious, or are the banks a little bit more cautious in buying people? It's a two-pronged question, I guess. But what are you seeing?
I think it deserves a two-pronged answer. I'd say that customers are definitely more conscientious in terms of their affordability, what they can handle each month. And then, yes, there are banks that are maybe buying a little more conservatively. Let's put it that way, right? But I think the key point is that, you just have to have the courage regardless to make sure that you put it out in front of them and let them make the decision from there. Because I think the way you started this off, this is a crucial time where people may not realize just how much they need it, right?
Excellent point. And Darrell, although we always have to be really careful and not even suggesting for a second, even by saying these things, I'm not suggesting that banks truly want to see this coverage on a loan, because they don't care. They just want to get paid back. But when it does come to a bank's potential ability to maybe make a decision, might they like the idea that it's covered, although they can't use that as any criteria, and we can't say that as any criteria? What do you think banks think when they're covered in that regard? The customer has to pay regardless. They don't care where the money comes from. But what do you think as far as that's concerned? Would it be a sell that can be done because the banks might feel more comfortable?
Well, in the past, training business managers, I always said, lending is pretty simple. It's the bank. When the bank lends you $1, they have one concern, and that's that they get it back. And they want to put themselves in the best position they possibly can to get that back. And I know in the past, and of course I haven't sat in that seat for a long time, but there has been times where the bank has told me as a financial services manager to make sure the customer buys a particular product. So, obviously they just want to have the best position possible in order to get their money back at the end of the day.
Thank you, Darrell. Now, as far Chris, what happens when people start to have money issues? Do you think that stress gets into the game? And if stress gets into the game, lack of sleep can get into the game. And if lack of sleep occurs, people could be potentially more vulnerable to having things happen to their health.
Well, yeah, I mean, it snowballs, and it's interesting because I was a mortgage broker for 20 years. And one thing, just kind of going back to what Darrell was saying, is how are we framing the opportunity with the customer? telling a story on the notes. So if we have these times the banks are tighter, a little tighter, there's no difference between this loan and or a mortgage. The lenders are human beings as well. If it gets referred to an underwriter, on the first touch, we do the meet, the greet, the rapport building, the credit application. We need to be finding out as much information about that client as possible, as much history, personal details, but the credit bureau really tells the story. And whether it's good, bad, or ugly, we can offset, our result with proper notes, Harvey. Tell the story, and we can include in the story that the customer is conscientious of their clean credit. They want to keep their credit nice, and they want to, maybe it's kind of a skinny deal. And of course, there's no tide selling. You don't have to have it. Lenders can be picky and choosy and take the deals they want. However, if we tell the story properly, the chances are way better. So I completely agree with what Darrell was saying there as well. And of course, Don. Having said that, in my experience as a mortgage broker for 20 years, it just kind of snowballs. It starts small and then it turns out big. The urgency of peace of mind, protecting what you've built is very, very urgent. And it's important for that to come across the line. It has to come out of our mouth as salespeople, the opportunity to protect their investment, to protect their livelihood, their lifestyle, and every single thing they built. And if we don't know enough about the customer, how can it be urgent to the customer? And we have to get out of our own way, and we have to build it into our scripting, and it has to be consistent or we won't move the needle.
Again, totally agree, and thanks for the answer. That's right on the money. You said a couple of things there too. And Dawn, as a former lender yourself, you're probably, again, and I want to be specific. It should never be stressed to the client that the bank wants people to have this type of product. Yet, without me getting into a position where it's going to be misconstrued. Is it almost a way of a responsible borrower protecting the lender as well as protecting their good credit rating? In other words, if I am going to be borrowing money, shouldn't I protect the lender against the potential problem, not just myself as a borrower? What are your thoughts about that?
Are you talking from a dealer's perspective? From
a customer's perspective.
I don't know. My personal opinion, I don't know that the customer thinks that they're looking to protect the lender necessarily. I think they're more concerned with their own well-being and state, right? So I mean, I don't disagree with the philosophy that, yeah, we want to make sure that our lender is protected, but I honestly don't feel that they go to that extent that they think, oh, I got to make sure that the lender is secure and stuff in their risk, right?
Okay, so
it's basically what's in it for me.
you brought up dealer then. So what about the dealer wanting to protect the lender? Is that important?
Yeah, no, that's why I was asking, because I do think that carries more importance in terms of the relationship and a status and a source and everything, and which brings me to the point that I don't think that, again, in today's world, that they push enough as a financial services manager. I don't think that they push enough to make sure that the customer is protected. And you hear stories. In fact, last week we heard a story from someone where, the customer came back and said, I wish you, obviously an unfortunate incident happened, and I wish you would have pushed harder, right? And they didn't have the insurance and stuff. And I think if there's something to be learned going forward, I think that's a key, right? We take that first rejection too easily.
Hallelujah, Don Berdusco. I love it.
Well, that's so true. You've heard Chris say a number of times here today, get out of your own way, which is a real good line, because if one thinks about it, we create our own objections in our own minds, and we don't sell things for whatever reason. Chris, thinking about that concept. Yeah.
Harvey, can I interrupt? I just had something running through my head. Chris said something a little earlier, and he said, he talked about, what you've spent a lifetime building. If you look at it that way, I mean, if you spend a lifetime building a house, would you not put insurance on it? I mean, it's kind of the same thing, right?
It's a non-negotiable, Darrell. And
Yeah.
look, I wrote down the 3 letters. It's called CBR. Okay, so it's it's the banking mentality. Don, you would be familiar with that when you write notes. But when we talk to a customer, the first thing we talk about is, well, your credit bureau, and all of a sudden we're experts, right? We need to humanize the experience. And to Don's point, it is not, you have to have passion when you're talking about credit insurance, credit security, loan insurance, mortgage insurance. You have to put your back into it. You got to put some meat on the bone there. It's a storybook. So the way to say it, Harvey, thank you so much for your trust. And, I cannot wait to get this unit registered for you. Listen here, your storybook, you've built a really good story in your life. You got a great family. You've got clean credit. I'm sure you would like to protect it similar to the way that you do with your mortgage insurance. I know you told me you have a mortgage, and you let me know you've got insurance. And for a lousy $20 bi-weekly, let's protect it the same way as the mortgage, to protect your storybook, to protect your peace of mind, to protect your family. If you do not build that type of passion on every single turn, on every single customer, you will not move the needle. And I will tell you that you are not the only nervous person in the room. Similar to customers, finance managers hate talking about insurance. That's the first problem. To your point, Don, it's the first problem. If we put our back into it, we are consistent. Someone said courage. I almost wanted to jump through the camera. I mean, hallelujah. It's courage, it's confidence, and it's repeat, repeat, repeat. And by the way, you will have happy customers, and some will cancel, and that's okay. We know we're pushing hard enough at that point. We don't want to jam. And Harvey, you talk about jamming, right? And I'm not saying that happens a lot in the industry. So to prevent that, folks, you do not need to insure this loan. The bank doesn't need you to do it. You've got the loan, you're driving away. The only question is, do you want to protect your family and have peace of mind? You can have full disclosure and have fun with it. It doesn't need to be an awful conversation. But similar to the way that I just took control of this conversation, it's what finance managers need to do. Take control of the conversation, have confidence. Harvey, back to you.
And again, how important, Don, is the passion that Chris just brought to this portion of what he just did? I mean, if one thinks about it, how important is that passion to deliver that information?
Oh, if you don't deliver something with a little bit of conviction and enthusiasm and engagement, then you're essentially put the people to sleep, and you don't build any significance to it, right? And the other thing that, I want to just jump on Chris's point there a little bit is, we let our personal opinions affect
100%.
how we're going to, if we're going to present, or B, how we're going to present, right? And Chris, you and I have a mutual client, and I remember being on a call not that long ago where we were talking about this very topic, and the premium came up. It was a $22,000 premium, and he was like, "Holy cow, I don't like." And so he thought it was too much money, like we all do. And I'll get back to my courage point. He had the courage to put it in front of the client, and the clients didn't even flinch and took it, right? We don't know what is happening in their lives and what's going on and what happened this morning or what happened yesterday or last week or last month or last year. And that, and that affects their ability to make the decision. But if you don't put it out in front of them with some sort of, again, conviction and confidence, then you're behind the, you're behind the 8 ball already, right?
I love it. And Don, to your point, and we get in our own way first. We're the ones nervous about the $22,000 premium. Watch, I'm going to role play with Darrell. Put your mic on, Darrell. Here we go. Darrell, hey, listen, I need to fully disclose for the benefit of this industry is you're going to know what's going on. So $22 biweekly per payment is the cost of the credit security for you, sir. God forbid, life, disability, critical illness, and it's $22,000 is the full premium. And I'm just going to ask you, Darrell, yes or no, do you have a mortgage?
Yes, I do.
Do you have mortgage insurance?
I do so.
Right. Why?
Well, because if something happens to me, I want to make sure my family's looked after. I don't want to leave them in a state where they can't afford to even feed themselves because they're living in a home that's not paid for.
Hallelujah, my friend. Do you want to use it? Absolutely not. Absolutely not. You're happy to pay the premium?
Yeah, I'm very happy to pay the premium.
Fair enough. When you bought the mortgage insurance, Darrell, from your mortgage provider, did you do the math backwards, or were you just fine with the extra $200 per payment on your mortgage and you said just put it on?
I was just fine with the monthly payment. As long as I could afford that, I was just fine.
Right. So I would just love to say to you, Darrell, that although it looks like a big number, in point in fact, it's actually less than your mortgage insurance, right? Dollar for dollar. So I would recommend to you to pay the lousy $22 per payment and go right to lunch. Have a great day. And all I need to know is, am I printing documents with the credit security or without it? Take it. Don't take it, Darrell. You will not hurt my feelings. I just need to know. I have it on all my stuff. I recommend for you to take it.
Absolutely, put it on.
So there it is. So relevance, relatability. The moment, Don, the moment they say $22,000, it's not over for the client. It's over for the mortgage or the finance manager. It's over immediately. We're the ones that get in our own way, Don. Yes or no?
Absolutely.
Yeah, 100%.
Beautiful and wonderful. And anybody, excuse me, anybody listening to this recording after the fact, probably be a really good idea to play this back a number of different times to be able to hear the passion that Chris was actually able to deliver. And Darrell, thanks for playing along. But what Darrell was doing was being the real customer. So there are so many people who go through these scenarios. Chris said a couple of really key points in that presentation. One of them was that he got rid of something, by the way. It's called Say It First. I think you all heard it. But when you know an objection is going to pop up, if you say it before they say it, then the customer can't say it because it's lost its steam. It's lost its power. So one of the lines he said in that was, by the way, were you happy you didn't use it? And meaning, were you happy you didn't use your life insurance or your sickness insurance? That's the number one objection. Had it before, never used it. So what's the point of getting it? Which, if you think about it, Chris, what's yesterday got to do with tomorrow? Here's an interesting question we could ask. Don, have you ever crossed the street?
Yes.
Now, by the way, what Chris was doing also for everybody watching this after the fact as well, Chris was not just talking, he was asking questions. Darrell was answering. If you ask questions, you get the other participant to play along. If they contribute information, if the customer themselves in this case says something, then it's true. If a salesperson pushes their idea on someone, it is also true perhaps, but it's a pushed idea. And therefore, asking questions is more powerful. So back to the scenario, Dawn, have you ever been in a situation where, let's just use this as a question, have you ever been in a situation where you have been sick or hurt in your life?
Yes, I have.
Being sick or hurt, there's two kinds of sick or hurt, right? There's short-term and long-term. What did you have to go through?
Fortunately, mine was just short, but I was off work for 3 weeks.
Wow. During the time that you were off work, did you still have bills to pay?
Yeah, the mailman kept delivering them.
Were you fortunate enough to continue earning money during your sick time, or were you like some folks who are not able to earn at that time?
I was getting some income, but it wasn't what my normal pay was.
Did that make things slightly difficult financially?
A lot of hamburger helper.
With that in mind, hopefully it doesn't happen again. But since it has happened in the past, could it happen again?
Well, there's always a possibility. Hopefully not.
If it were to happen again, could it be for a long time as well?
Well, sure it could.
If there were a way you didn't have to worry about your car payment bill and thus free up the car payment money that has to be paid and use that to pay some other things to help you with whatever you are getting regardless, how much easier would your life be at that time?
It would definitely be a little simpler.
And what would that protection be worth at the time?
Priceless.
It's invaluable.
So if there were a way to do it, the bank allowed you the money and it was affordable, what would you do right now?
If it was affordable, I'd get it.
And by saying affordable, as I put it, it's saying it first. as Chris basically did what he did. You didn't want to use it, did you? We're saying it first. So if we know that there is an objection coming, the power of say it first obviously is huge. For those listening, and thanks, Don, for role-playing that too, but everybody listening after the fact, listen to the buying signs, listen for the buying signs, but more importantly, ask questions as Chris did to be able to funnel the presentation to where it has to go. Chris, as a person who has worked in the finance office and done what you've been doing, training people to do so in your team as well, what do you hear as a feeling that the finance managers don't want to sell it? You say it's one of the hardest ones to sell, the one least sold. Why do you think that happens?
Why do finance managers
push back on that one?
Why do they push back? Because they're just as nervous about the subject as the customer. That's the truth.
Do you think product knowledge has something to do with it? They might know the other products more.
Product knowledge is absolutely incredible. My son is a brand new realtor. He's getting mentored by top realtors in the industry, and he tells me he's blown away. He goes, there's nothing they don't know. And so he's buying in, right? Product knowledge, there's nothing that can trump it. And by the way, if we know that we're going to have an objection, Don, your mic is still on. Don, you live in a detached home, condo, or a townhouse?
Detached home.
Detached home. What city is that, Don?
Langley.
In Langley, right on. You have fire insurance on that house, Don?
For sure.
Do you want to use it?
Not at all.
I hear you, buddy. I'm not using it on my house, hopefully, either. We're all the preventative measures, including insurance, the similar thing we need to do here for this investment today. It's a relatable, Harv. We have to be ready for the objection. I say it on my screen. I love everybody to look at that. What's your plan? My plan is there will be an objection, and I'm going to answer it like this, and have some passion in it.
Well, let's ask one other quick question, Chris. I understand you covered for your home for fire, and again, using a metaphor, can your finances catch fire in life?
Oh, out of control.
And if they catch fire, is there a potential where things can get out of control, as you just said?
Absolutely, yeah.
If there were a financial fire extinguisher you could actually use to help get rid of those flames, thus making your life more comfortable at the time. Would it make sense to have the extinguisher?
Absolutely.
Let's show you the extinguisher. Let's make sure that the flames never get out of control and life goes on as well as it can be.
Actually, Harvey, just quickly, when I recently renewed the insurance on our home, BCAA was deliberate in asking, do you have a fire extinguisher under the sink in the kitchen? It is actually a thing. It's relevant now, and it's actually something in a fun way that's relatable to people that you could bring up. And if the insurance companies are asking, I'm across the line to your point. Absolutely.
Well, that's what it is. And thank you for that. Thank you for the contribution. Ladies and gentlemen, our great clients across the country, insurance is a really important product. And Chris alluded to something earlier too, by changing the name of insurance to something else, whether it be your credit rating protection, your good credit rating protection, your peace of mind program, which albeit is an overused terminology. Create a word track that is going to be enticing for the customer, but more importantly, enticing for you as a finance manager. Because to allow a client to go out in the world without credit protection, especially during a financial issue time, is unfair for the client. You'll still make your money. You might make a little less. Yes, there might be chargebacks. Live with that. I'll tell you what, if you sell 10 and have one chargeback, you still keep 9. If you sell none, you have none. So live with that, but don't worry about that, because what's most important is protecting the client against the pain that could occur. Don, any last words?
I'm going to go back a couple of minutes ago when we talked about product knowledge. We were conducting a workshop with a bunch of new potential finance managers last week, and the one thing I found and I conveyed to them is that you have to do your due diligence and want to get better. That includes product knowledge at the top of the heap, role play, practice, doing whatever you can to make sure that you are doing your due diligence for the customer. and getting all the products out in front of them. If you're not doing all those things, I as an account manager, I can come in, I can go over with you, but if you're not taking time to read the in this case the insurance certificate or know all the ins and outs and so that you can present this product with passion and to the best of your ability, then you are doing an injustice to yourself and the industry
and the customer.
And the customer
for sure.
Yep.
Louise Martel, bienvenue. I see your photo there. Louise is in Quebec, one of our great provinces in the country. And Louise, welcome, bonjour. And
hello, everybody. It's
Good
very
afternoon.
interesting. I want to have a translation after Harvey, if you can.
absolutely, absolutely.
Yeah, make it for me.
I will do that.
Chris is very enthusiastic, and I lost much conversation, but
ça arrive pour moi souvent aussi quand je parle trop vite ou quand les gens parlent trop vite aussi. I said basically that it happens to me when people speak fast as well. So we will do that, Louise, I promise. Louise has some other issues in Quebec because Quebec is doing some fun things right now with insurance. And we'll be talking about that in the future. Here's what's really important to everybody. Insurance, forgetting the word insurance for a moment, insurance is only exists for one reason. Chris and Dawn and Louise, insurance exists for one reason, to prevent the loss of something valuable. That's the reason for insurance. If you don't care about a product, if you don't care about something, you don't insure it. So without spending too much time, because we're over time a little bit, Chris, if you own a piece of property that has an old shack on it and the wood is falling all over the place, would you insure it against fire?
If it has no value, probably not.
Okay, there's no value to it. It's just a house, a shack, a shed that existed years ago, and the wood is like this and the wood is like that, and you can see through the ceiling. Would you insure that from fire?
That would be an educated decision, of course.
But would you do it if it's useless?
If it's useless, I would not do it. No, I would like to, I wouldn't spend the money because there would be no value on the other side.
Dawn, would you insure something you buy from Dollarama against breakage?
no.
And Louise, would you insure something if the car was 20 years old and no motor, no engine, it doesn't do anything? Would you insure that?
no.
No. The only time insurance is good is if you have something to lose. Quelque chose à perdre. Well, ladies and gentlemen, if one were to put a score on your credit rating, what score do you put as far as value is concerned to you? Is your credit rating valuable? Votre niveau de crédit, est-ce que c'est valable? Is it important? Chris, yes or no?
Priceless.
Dawn,
Priceless.
yes or no?
Absolutely yes.
Louise,
C'est très important.
how do you not protect the thing that allows you to have all your other things?
Yeah, absolutely, Harvey. Way to bring it home.
So let's have some fun, everybody. Your account managers are coming up to see you as time continues. FC Academy shares all kinds of great ways to overcome objections and close sales. If you keep hearing objections from people, you keep buying the objection. It's up to us to listen to the ways to overcome them, believe in the product like Chris believes,
Absolutely.
and offer with passion.
Harvey, can I say one last thing? And this is going to complement what Dawn said. Use the first Canadian logbook, everybody. If you can measure it, you can move it. Visibility is key. You can't just say, I want to sell more insurance. I want to increase my profitability. Well, where are you right now? Precisely on life, disability, and critical. If a salesperson cannot tell you where they're at, that is the first step to achieving greatness.
Utilisez le logiciel de First Canadian pour faire certain que vous savez exactement combien vous avez vendu ou combien vous avez manqué, par exemple. So thanks everybody for joining. Without us, without you, the coffee talk obviously doesn't work. So join us, everybody, please, and share this with your finance managers. Let's make sure insurance is sold. We're going to talk more about it and other things coming up. Thanks, everybody. On behalf of First Canadian, you're the best. Take care, everyone.